The financial market crash of 2008 set in motion the deepest recession since 1929. What followed was a decade and a half of crisis, austerity, and social and political turmoil as never seen before since the end of World War II. Never again, said the capitalist class back then. But capitalism is an anarchic system which cannot be controlled by any individual or group of individuals. And well, here we are again. Over the past few weeks, the collapse of two American companies have set in motion fears of a new major financial crash on the horizon. The head of the IMF has been out saying that the private lending market keeps her awake at night. The head of JP Morgan has said that when you see one cockroach, there's usually more. These are some of the top strategists of the capitalist world. And what they're reflecting is a system which is clogged up at every level. A polycrisis is emerging throughout the system at every level. The difference between today and 2008 is that the capitalist class has used all of the tools at their disposal, and today stand completely exposed in front of this huge, looming crisis. The consequence? An explosion of the class struggle everywhere as the rich try to unload their crisis onto the shoulders of the workers and poor. My name is Hamid Arizadeh. This is Against the Stream, and I'm here today with Francesco Merli. Back again. It's been a while. Now, Francesco, we've seen. Let's look at the facts. What's happened here? We're dealing with the collapse of two medium-sized companies. One of them, First Brand, has 26,000 workers.
Yeah.
What happened?
Well, they filed for bankruptcy, but the thing is that these companies are not necessarily so relevant as to provoke a crash, but they highlight a situation that is widespread on the US market, and that is a repetition and an expansion of a bubble that is similar to the 2008 crisis, subprime market mortgage crisis, and it is linked to shadow banking in the United States. So all this excess capital, these profits, this liquidity that has been unleashed into the system in order to counterbalance the impact of previous crises, is now accumulating, is now inflating a bubble at that level.
Yeah. Well, why don't we? I mean, let's lay out the facts of the case, so to say. Two companies. One is Tricolour or Tricolour. Yeah. I don't know how you would pronounce that. Tricolour, which was a company that gave loans for people to buy cars. Actually, they had a chain of used car dealerships, but they don't really make money off of the used cars. But what they made money off was lending the money to very poor people on little or no income, or little, how do you say, legal income, to sell them cars, basically. The other one was a car parts maker, the First Brand group, which I think is kind of the more interesting case study, because this is a company that's set up in 2013, and initially they were just making one specific car part. I can't remember exactly which one it is now. But then they went on a kind of shopping spree. As you said, the financial markets were flooded with credit following the 2008 crisis, the lowering of the interest rates. You saw this phenomenon of companies that just exist on the basis of buying up new companies. So they would buy a company, they would take up a loan to buy a company. The general value of the company would go up, and then they would, on the basis of that value, take up new debt to buy new companies. And in the end, they bought 23 companies over the course of a bit more than a decade, and established a kind of a monopoly on non-brand spare parts. They had around $6 billion of debt from traditional financial bodies like banks, basically. So this was $6 billion of good loans, we can say. But what has emerged in the past period is that they had another $5.5 billion at least of debt in what you called correctly the shadow banking sector, private banking or private lending, we say, private credit sector, which is non-banks that give out very creative types of loans. The loans that this particular company was creatively engaging in was based on their transactions, as in, if they sold something, normally, you sell something to another company, you get the money 30 days or more later. Now, in that period, you can go to a financial institution and take up a loan on the basis that, look, these guys are going to pay me in 30 days, and I'm going to you lend me the money now until they get it.
Yeah, it's called factoring.
Yes. And you do the other way around as well, which is that if for instance, these guys paying their suppliers would take up a loan to pay them later. So they would say, look, we're going to pay our suppliers in 3 months instead of 30 days. Lend us the money. So everyone is happy. The buyers pay later. The sellers get the money earlier. And you can do that, in one transaction if you're just kind of filling the gap between money coming in and going out. But what happened here is that you had at least $5.5 billion worth of debt, essentially doubling the amount of debt that the company held, while the actual value of the company was a fraction of all of this. $11.5 billion debt is what they know of so far, whereas the actual value was probably a fraction of this. Yeah.
And what makes everyone nervous is that no one knows exactly what the situation is, and in fact, whether this company is a cockroach, an isolated cockroach, or there are a lot more cockroaches.
Yeah.
And the assumption that a lot of strategies of capital internationally are making is that there is a lot more of this because of the situation that has been created on the financial markets.
Yes. Well, the head of the IMF, I got a name here. What's her name?
Kristalina Georgieva.
There you go. You said it better than me. She said recently that the private banking sector is keeping her awake at night. Now, these kind of people normally don't say this. Normally, they're out kind of trying to calm things down. But she said, this is from The Guardian, that there's a significant shift in financing from the banking sector to the non-banking sector. The non-bank financial institutions are not regulated as closely as the banking sector, she points out, meaning that the world could end up in a difficult place if private credit sector continues to grow significantly and the global economy then weakened. Now, then she goes on to explain, the fund is concerned, this is the IMF, is concerned that banks are increasingly lending to private credit funds because these loans often deliver higher returns on equity than traditional commercial and industrial lending banks, thanks to the lower capital requirements allowed by their collateral structure. What is this? This is technical speech. But what happened was, before 2008, we saw a massive lending spree. This was back when you walked into a bank and you couldn't walk out of it without a credit card thrown into your face, basically.
Or a mortgage.
There was a massive increase in credit, highly unregulated. And obviously, the more risk you could take, the more money you could make. There was a credit bonanza and a money-making bonanza on the basis of that. That was the spark of the 2008 crash. In the West in particular, but throughout the world, following that crash, you had a series of regulations which made sure that that banks in particular had a certain amount of money in the bank in relation to how much they could lend out. So
Mhm.
they set a certain limit to what they could lend, and the creativity with which they could lend money, the interest rates they could charge, and so on. But obviously, what we're seeing here is the market always finds a way around it.
Yeah.
And then what's happened is that you set up a company that's just not a bank. You don't take deposits, so you're not under the same regulation. You're not under the same scrutiny. It's not a total Wild West, but it's almost a total Wild West. And no one really knows what's going on. This is what they're saying now is exactly what they said during the subprime mortgage crisis. They said they would lend money to these people who didn't have the income or future prospects of an income to buy a house because housing prices were going up.
They were willingly issuing bad loans. Yeah.
Bad loans. They would divide up these bad loans and then they would sell them on the market so that no one would end up with a total risk of those things because they were bundled up with good loans. And it was fine until it wasn't. Now you have the same thing, just with companies. Although, I mean, here you have with Tricolour, it was actually subprime loans on cars. But you have this phenomenon with the private lending, which is lending out to all these companies, where there's no transparency over the how much they're indebted, what they're owing to who, and so on, and then you sell it off to the world market.
And the problem is that this world is not confined to a bubble that is external to the banking system, and the banking system is always the end. It is gonna be hit at the end of this. There was a research by the IMF that revealed recently that American and European banks have lent the equivalent of 4.5 trillion to private credit firms.
Mm-hmm.
So $4.5 trillion, of course, it's a fraction of the amount of loans that banks globally issue, but it is becoming quite a large amount, which is impossible for anyone to control.
I think it's about 3 or 4% of world GDP, which is quite a significant amount. Now, we have talked about this before. The way in 2008, world capitalism was faced with a severe crisis. A crisis of overproduction, which even at that time had been postponed for a certain amount of time by the issuing of debt, by bubbles, by creating bubbles in the housing market, and derivatives of that, such as the subprime market and other lending markets. And you saw a crash which saw the Lehman Brothers, a major financial institution, collapse. There was a complete freeze of credits all over the world. No one wanted to lend to each other because no one knew what kind of toxic, whether they would get the money back, how many toxic assets the others had. And the world economy was at a precipice of a major collapse.
Mm-hmm.
The way that they came out of that was by issuing more debt, by lowering interest rates to almost zero for years and years. The governments stepping in to
bail out the system,
to bail out the system, to bail out the banks, to bail out the companies that were going out, buying up all of this toxic debt was bought up by the governments. And in effect, you see a crisis in a capitalist system. This is what the bourgeois themselves will tell you. It serves a purpose. It clears away unprofitable companies. It clears away overproduction at a huge cost for the working class. But from the point of view of capitalism, that's the function within the system, that you get into a crisis, you sweep away the unproductive parts, and then you're ending up with a core of productive parts. Of course, you're still preparing bigger crises in the future. But the way that they overcame this crisis was not by clearing out the infectious pus, so to say, but by keeping it on life support.
Yeah, in fact, what they did was to socialize all the losses and allow the capitalists to continue from then as if nothing happened. No one in the capitalist class paid the consequences.
Yeah.
The bankers, the financial tycoons, they all got richer out of this.
Yeah. Someone was saying back then, capitalism is socialism for the poor and free market socialism for the rich and free
And
market for the poor.
Yes.
Which is exactly what it was. As you know, they talk about free enterprise and private property being the driver of innovation, but when it came to and the state being
stifling
development
of the economy.
But when it came to it, the state stepped in to save the capitalists, to save big business, to save the banks.
Yeah.
And who was left with the bill? That was the working class.
Yeah, because the bailout meant a steep increase in public debt everywhere. And then we had a decade or more of austerity in order to pay back this additional debt. So they socialized what the capitalists had lost, their losses, so that they wouldn't have to face the bill to pay the bill. So, and they passed it on onto the working class everywhere.
So it's not true that the capitalists, they are rich because they take risk.
All the risk.
Actually, the risk is taken by the working class, whereas the super rich take home all the profit.
And in fact, I think every crisis ever since has one characteristic. Always the public, always the state, always the central banks, always authorities that are financed by the revenue, the tax revenue collected from working people, is stepping in order to save the capitalists from any crisis.
Yeah. Now, a part of the consequences of this was the creation of what we call zombie companies. It's been come to be known. Zombie companies are companies that have so much debt that basically their debt and the interest payments outstrip their profits, so that the only way that they can survive is by relying on these cheap debts. Now, Associated Press did a survey, a study of zombie companies last June, and they said that they found out that the numbers of zombie companies have risen to nearly 7,000 publicly traded companies around the world, 2,000 in the United States alone. These are public, so these are on some sort of a stock market. That's just, first of all, the majority of these are not the major companies, but it's 7,000 companies, which is around 20% of all listed companies. This is quite a large percent. They account for 130 million workers in, let me just see, this is in kind of Anglo-Saxon kind of countries: Australia, Canada, Japan, South Korea, and United Kingdom, and the US. So this is a small fraction of the most advanced countries. And in these countries, 130 million workers are employed by these companies. So this is a significant chunk. And I think we can easily say that these Tricolour and First Brand were more or less zombie companies. Now, here's what they say. They say, and they link it back to this 2008 again as well. They say credit rating agencies and economies warned about the dangers of companies piling on debt for years as interest rates fell, but got a big push when central banks around the world cut benchmark rates to near zero in the 2009 financial crisis, and then again in 2021 during the pandemic. Now, it says, many zombie companies lack deep cash reserves, and the interest they pay on many of their loans is variable, not fixed. So higher rates are hurting them right now. This was last year, and we've seen higher rates. Most dangerously, zombie debt was often not used to expand, hire, or invest in technology, but on buying back their own stock. Now, this is an interesting thing, because the capitalists say, oh, we need to save these companies and we're going to give them this cheap debt so as to stimulate growth. stimulate investment. But actually what these guys find, this is the bourgeois analyzing their own facts and figures. We could have told them this, but this is what they find, is that this zombie debt was not used to expand, hire, or invest, but on buying back their own stock. These so-called repurchases allow companies to retire their own shares or take them off the market as a way to make up for new shares often created to boost the pay and retention packages for CEOs and other top executives. So what happens is you give a bonus to your CEO and a top executive in the form of a cheap share, and then you take up a loan in your company to buy back shares in general, to push up the price of those shares. And that becomes a business model. Of course, it's not just related to the CEOs and the top executive. It's also related to the stockholders. The problem is that all of these buybacks leave these companies with even less cash. So it becomes like a Ponzi scheme of taking up loans, buying their own stock, using whatever cash they have as well, push up the stock prices, take a loan in the stock prices, buying their own, which is basically what First Brand did, and which is what a huge number of these people do. This was extended. This is not just a thing for small and zombie companies. As companies had a chance to cut their debt after the then President Donald Trump's 2017 tax overhaul slashed corporate rates and allowed repatriation of profits overseas. So they gave them an incentive to bring back their money and pay less taxes in order to bring down the debt. That's not what happened. Most of the windfall however, was spent on buybacks. Over the next 2 years, US companies spent a record $1.3 trillion repurchasing and retiring their own stock, a 50% jump from the prior 2 years. So this is every time they throw money at it, every time they throw tax,
it just goes to inflate the bubble even further. I think all these things are difficult for normal people, ordinary people to comprehend, really. The scale of this swindle that is ongoing. And but why is this happening? I think this is the important question we must ask. And the reason for this, which can take many different forms and will transform itself all the time, and has been transforming all the time, to find a way out of regulations, to find a new venue, to increase super profits and so on. The underlying problem is that the world capitalist system is facing a crisis, a protracted crisis of overproduction. And the capitals don't find it, the capitalists don't find it convenient to invest. They don't want to create more productive capacity. In fact, the productive capacity in the world is the utilization of this capacity is lower than it used to be. For example, during the boom of the 60s, it used to be around 87%. Now it's 10 points lower, 77%. So what's the point? You have a lot of free money. You have a lot of capital that is just looking for a venue for investment, and it doesn't go into productive investment. It goes into any sorts of speculation.
Yeah. You see, we always told that there is a thing called neoliberalism, which is all about deregulation. It is all about this. It's like a form of capitalism, which is particularly bad and destructive and greedy. But the point that Marx makes, actually Fred Weston, another co-host who was a regular here, he made the point this morning that Marx makes the point in Capital, in the book Capital, that capital as such is an organism which needs to expand. That is what capital does. And where it can expand fastest and the easiest with the least amount of risk, that's where it would go to. And as you say, we have a major crisis of overproduction, which has been bubbling away for years
Yeah,
actually.
you can see that in car production and sales.
Yeah.
You can see that in steel, in everything that is
Yeah.
fundamental.
And which means what? We have factories which can produce far more than ordinary working people
Can buy.
can buy. And bringing out new factory lines is not profitable. In particular, when the companies that are making those cars, for example, they are making a lot of profit because they built the factories years ago. They have no interest in, they control the market. There's no new entrance onto the market, although now there is from China. But the amount of money that it would take to reinvest and upgrade and, how do you say, raise the level of production onto more advanced level, compared to the return that you get, is much, much less than you would from speculation.
Yeah.
And here's the thing, we have a very good article by Nicholas, another co-host, Nicholas Albin Svensson, another co-host here, called "What the Stock Market Bubble Can Tell Us About the State of the U.S. Economy." And here he talks about the price over earnings ratio of the major American companies. This is no longer
is
small and medium
In
term.
the stock exchange.
This is a major. This is Alphabet. This is Tesla. They are valued at hundreds of times more than what they're actually selling.
Mm-hmm.
A company like Tesla or Nvidia, several hundred times. I can't remember which one. I think it was Nvidia. 700 times more than the actual profits that they make. No, sorry, Palantir, which is an AI company. It's valued 700 times more than the actual profit that it churns out every year.
Mm-hmm.
Which means that you buy a stock from that, you're not gonna make your money from
the future
from the
profits.
future. No matter how much they increase it, the market is not big enough for them to increase profit that much. Back in the days, you used to buy a stock, and what you got from it was the earnings. So they would divide up the profit every year. Some of it would go back into the company. Some of it would go to the shareholders. And on the basis of that, you would buy your share. So, okay, this is how much they're going to pay me. This looks like a company that's going to be making a lot of money, making a lot of profits. So I'm going to invest in it. Today, that's no longer the case, because with the way that companies transfer money to their shareholders is not primarily via share buyback. Shareholder dividends.
Yeah.
But by share buybacks.
Mm-hmm.
Which means you're not buying the future revenue and profit of the company. You're buying the future stock price of the company.
Yes, it's a betting scheme, in fact.
Yeah.
And what is happening is that the U.S. stock market has become the recipient of investments from all over the world because of this rise in the stock market value. What we're talking about is companies like the ones you mentioned that have increased their stock market value. Their stocks have risen in price and enormously. And so all the capital that is idle worldwide is going into the United States. And this is supporting this bubble. It's developing. It's inflating it even more. And the problem is how long can this last? How long can this last? And what will be the consequences of a crash in the U.S. stock market? So we're back to the same problem that capitalism has been facing over and over again, which brings us back to 1929. What will be the consequences of a crash in the stock market?
Yeah. Well, let's look at what the capitalists say. That there's been quite a few warnings coming out over the past week. Gita Gopinath has written in The Economist. She is a former chief economist of the IMF. Mm-hmm. She's a professor in Harvard, and she's written this article called Gita Gopinath on the crash that could torch $35 trillion of wealth. She starts, the American stock markets has seesawed lately amid a flare-up in trade tensions, but remains near its all-time high. This is the warning sign number one. Major trade tensions all over the world. There's a trade war going on with China,
and the stock market
is booming like
continues to boom,
never before.
yeah.
The surge, fueled by enthusiasm around artificial intelligence, has drawn comparison to the exuberance of the late 90s that culminated in the dot-com crash of 2000. Though technological innovation is undeniably reshaping industries and increasing productivity, investors have good reasons to worry that the current rally may be setting the stage for another painful market correction.
Yeah, it's funny how they use this type of terminology. A market correction is the equivalent of a crash.
Yeah.
That's what she's talking about.
Well, this is big. You see, economists normally don't say this kind of things. But the fact that here's the next sentence that she says.
Yeah.
The consequence of such a crash, however, could be far more severe and global in scope than those felt a quarter of a century ago. At the heart of this concern is the sheer scale of exposure. This is what you were referring to, both domestic and international, to American equities. Over the past decade and a half, American households have significantly increased their holdings in the stock market. Everyone is now buying stocks. I'm told by everyone I talk with, my friends.
Well, that's a sign that the bubble is about to burst.
Encouraged by strong returns and the dominance of American tech firms, foreign investors, particularly from Europe, have for the same reasons poured capital into American stocks while simultaneously benefiting from the dollar's strength. This growing interconnectedness means that any sharp downturn in American markets will reverberate around the world.
Yeah. And in which way will that reverberation happen? It will affect the consumer market in the United States, because today families are investing their money into the stock exchange. There are people who are basically even lending money in order to invest more in the stock exchange.
Yeah.
Not just the big companies, but even the ordinary guy, the drugstore guy, who has a bit of savings.
Yeah.
And he's using these savings and putting this money into the stock exchange in order to be part of this, wealth creation, as they call it.
Yeah.
And in fact, this is just a bubble.
Yes.
So any correction, as they say, or crash in the stock market will affect these people. And then there is the international angle to it, because pension funds, hedge funds, everyone with money on an international level that is floating around are putting this money into the stock markets in the United States.
Yeah.
So a crash in the stock market in the United States will have global consequences, as it always had, and this time even probably more than usual. And it's interesting to see in this article, Gita Gopinath is trying to estimate what kind of impact that could have, putting some numbers to it. And she comes up with the following estimate, which is basically a correction that could wipe out over $20 trillion in wealth for American households. This is 70% of American GDP. We're talking about the stock of wealth. So whatever, the families have, their savings, their properties, whatever they have, the equivalent of 70% of 1 year of production of the United States economy, that's what is going to be wiped out, according to
Could be.
Yeah. And that's for the United States. And then there is the impact on the rest of the world. And she estimates that about 20% of the rest of the world's GDP equivalent will be wiped out by a crisis under the present circumstances. That's why they're getting so nervous.
Yeah. It's quite interesting because, it's quite interesting because I was listening to a podcast by Wall Street Journal this morning, and their line was,
everything is fine.
Yeah, lots of people are saying, but at the end of the day, it's not as bad as it looks. And there was another one, which is a magazine, online magazine called Market Watch, which is similar kind of stockbrokers. And they were quoting psychological how do you say, negative, the psychological negative bias of humans.
Mhm.
We are always tend to be over worried about things. In other words, what they're saying is keep buying, keep
Yes.
buying. And that is the crazy thing about this. There is another very interesting article in the Telegraph, which is called, this is from the 11th of October. It's called, this is before these two companies crashed, I think. It says, the big crash, are we really heading for another 1929? And it makes a lot of the same points as the Gita Gopinath article. But I just want to say the ending of that article. It says, for now, fear of missing out continues to drive the headlong dash into the artificial intelligence boom. Everyone knows it's out of control, but as Chuck Prince, the former executive of Citigroup, said just ahead of the 2008 financial crash, as long as the music is playing, you've got to get up and dance. That is great. That is the great intrinsic curiosity of finance, that despite all the lessons of history, it never knows when to stop.
Yeah.
Eternally condemned to a cycle of boom and bust, it invariably pushes the envelope of excess until the whole house of cards collapses on itself. There is one thing that they don't notice here, though, is that the bankers don't pay. The bank, I mean, they might lose, a few of them might lose a little bit of money, but they have means of ways to getting out of this. The people who are paying, this is what they're used to, is the working class. The government steps in and saves them.
Yeah, it will be indirect if it's through government bailout, like it was, or directly. Losing money, that is your bank deposits, your savings, whatever you have in these hedge funds for your pensions and so on.
And driving this boom, again, to come back to the initial discussion we had, is this bubble on the stock market is not just dormant capital, cash that's just lying around, but is also a boom in lending and in private sector lending, which is driving a huge part of this. What's it called? Margin. What did you call it? The
margin debt.
Margin debt, which is companies taking up loans to buy shares.
Yeah, margin debt. That's an indication of this situation where a bubble is overheating and it's reaching the point where it's dragging everyone in. Everyone wants to be part of it because of the high returns promised on previous experience, let's say. But they don't realize that by being drawing in, the bubble is reaching its end. You cannot draw in what is not there. So once it's becoming global and so extensive, then that's a sign that we're close to that. No one knows how long it takes for the bubble to burst, but there are some indications that it is about to burst. And one of these is this margin debt. Margin debt is, among investors, has increased in the last 5 months by 32%. And that's like something that those who are a bit more sober up and trying to understand what is going on are pointing out. It's that in the past, when we had this sudden increase in margin debt, that I repeat is essentially a loan taken out by investor from a broker to buy stocks. So he's not buying these stocks with his own money, he's getting a loan in order to then buy stocks, betting on the future price of these stocks, so betting on the possibility of making a profit out of it.
So basically, you go to the casino.
Yeah.
And you wanna bet on red.
Yes.
You don't have any money.
You go to the casino and
let's say
money from
you
them.
have $100. Then you take a loan from casino for $1,000.
Yes. Put all of it on
if you win, and pull all of it on red. If you win, obviously you make a ton of money.
Yeah. If black comes out,
but if you lose,
you end up losing your money and having a debt with the casino owners, which is not nice.
Which is exactly what also happened in the run-up to the 2008 crisis, where they were leveraging, as in instead of why invest just $1 million you have when you can take $10 million of debt against it and invest that. Obviously, when it goes well, as long as the market is booming, everyone is winning. Yeah. Money is flowing. But all things have a limit, and debt certainly has a limit. It has to be paid back.
Yeah.
And that's where we're heading. Now, one of the things that both in Gita Gopinath's article, maybe we should read what she says. There were certain things which have been, how to say, fueling this this debt boom, which is again fueling the speculative bubble. One of those has been the strength of the dollar. Right? The dollar used to be a safe haven. It was incredibly strong. The American central bank or the American state could basically issue infinite amount of almost debt. This is what they said, because people always want to buy dollars. People always want to buy dollar debts, because this is the strongest reserve currency in the world, and they can, even if they just print it, it won't lose value, at least not significantly. But we are seeing that the dollar has been declining.
Yes.
More than 10% since the beginning of the year. On the one hand, caused by the tariff wars, the instability, the political instability.
Yeah, that's reality kicking in again. It's not just a insulated bubble that has no relation with the reality. There is a relation with the reality. It's very distorted. But eventually there is this link with the real world situation, which is one of increased instability. It's the growing burden of debt globally that is creating a situation where the states, the governments, the central banks, every big actor in the system is limited in the options, what they can do. They cannot just expand this indefinitely.
Yeah.
And if they do expand them, which is always the case with crisis, when they have to face a crisis, that's what they do. But there will be a lot of consequences that in the past they kind of got away with. But today, if they repeat that again, the consequence will be a lot more severe.
Yeah. Yes, because I mean, this is what all of these different articles say, all of these commentators say, is that back then you had a relatively stable
Political system,
for
example.
Where do you see a stable political system today? You had a world economy which was completely interconnected and interdependent.
Mm-hmm.
China was growing. America and China, even though there were slight competition, but they were mutually benefiting from the growth of the world market. World trade was booming. Today, there's a massive trade war going on, and none of them have an interest in stepping in to helping each other.
Yes.
In fact, what the article in the Telegraph quotes Gordon Brown as saving the world economy by bringing all the major capitalist powers together and intervening.
Yeah, try that now.
Then you have massive government debt, which is now in the most advanced capitalist countries more than 100%.
More than 110%
of
it's
GDP.
the historical peak almost.
Interest rates are rising. They also want to, at this time, increase defense spending dramatically by trillions of dollars. And how can they intervene to do what are they capable of doing? What are they capable of carrying out?
I think we're talking about if nothing is happening and there's not going to be a crisis in the stock markets in the United States, which of course when it happens will create completely different scenario. But even if it doesn't happen, this is continuing to develop. What you were describing is not going to be resolved. And the problem is all these things have come up all together. There is nothing that is stopping any aspect of the crisis to evolve. So we have, for example, the consequences of the 2008 bailout was austerity.
Yeah.
The state was taking over debt, and then they tried to recover by cutting the budgets, social spending especially, and presenting the bill to the working class everywhere. That's the case in Europe. It was the case in Spain, in Greece, in Italy, in the UK, in everywhere. And that policy failed from the point of view of the ruling class because it didn't manage to get the debt under control. The debt has been increasing ever since.
Yeah.
So there's no way out of that. But it has provoked political instability because, of course, there is a reaction to this. The consequence is a leap in consciousness. People are thinking about what is society giving us? What is the future for us?
Yeah.
Capitalism is not delivering from the point of view of the fundamentals of life for people, even in the most advanced capitalist countries like the United States or European Union, Japan, and even those where the growth is more concentrated, like China or India. It doesn't really have an impact on the conditions of life of the working class.
Yes, I mean, they're talking about a profit boom, a stock market boom. The economy is going better than before. Everything is growing and everything is getting better every day. But actually, if you look at the real society, everything is falling apart. One is living standards, but the underlying structure of society is falling apart. And this is the damning, condemnation of capitalism, that it is incapable of developing the means of production at this stage. That's what all of this really reflects, that the system as a whole has reached a place where it's not capable of developing the means of production. We talked last week about rare earths. Europe and America are now finding that China sits on the full supply chain.
They're complaining that
of rare
China
earths,
is now
right?
weaponizing this in the trade
But
war.
But I think rare earths is quite an interesting thing because this is something that the capitalists themselves claim they need, right? And here you see the anarchic nature of capitalism as a system. The capitalist class say we need to have a rare earths infrastructure, which means we need to have mining, we need to have separation, we need to have refining, we need to have smelting. I'm not a minerals expert. Maybe I'm mixing up some of these things. But as far as I understand, these are kind of the main parts of the production cycle. And China sits on the majority of these.
Yeah, they have a virtual monopoly over that, about 90%.
If America, for instance, was to reach independence from China in these fields, it would require tens, if not hundreds of billions of dollars worth of investment into technologies, into production capacity, into all sorts of things, into educating the new layers of the working class.
Yeah.
For a market that nominally, well, the rare earths market is just $5 billion per year. So this would take years for the individual capitalist to make back in terms of profit. Obviously, society could benefit from productive investment, but they have no interest in doing it. Even from their own point of view, no one has an interest in doing this. Why do that if you can just put your money in AI? Or you can just start writing a software which has very little upfront investment, and you can get much, much higher return. This we see throughout the economy, the whole of the infrastructure, all of infrastructure, roads, sewage, water. In Britain, we've had this.
Energy.
Thames Water. Energy is falling apart. It's dilapidated. It's old. It's decrepit.
And international conflicts and rising frictions between the different imperialist blocs are also playing a role in disrupting all this.
Yeah. And so that all of this makes it even less, give less incentive for the capitalist class to invest.
Yes.
And every time they make some sort of a measure, they throw money at them, they have tax relief. It doesn't go into this because why would they invest? Those installations which exist are already making tons of money, and new installations is not very profitable. So you have a system in a total crisis, and the addition of this huge amount of credit is actually adding to that, is exacerbating that, because it's creating like a massive
amount of
suckling hole for the bourgeois to sit and leech off, while society is going down. That is a system at a complete dead end that cannot develop. And everything they tell us, that this is the best of all worlds, this is how we get innovation, is complete lies. And as you said, what we're going to see now is what? Who is going to pay the price of this crisis? Although I have another question first. A lot of talk is now about a crash.
Mm-hmm.
What would a crash mean? If there was like a real crash?
Well, it would mean there are two options there. One is for governments and states to intervene like they did before by expanding again the debt, taking over all the losses. That's what they've been doing consistently ever since 2008. In 2008, they allowed the collapse of Lehman Brothers, but then they regretted it because that was like provoking a domino effect on the financial system that would knock out basically the whole establishment of the financial system. So they intervened, they bailed out the banks, they bailed out the financial institutions, they bailed out the insurance companies, they made public the losses provoked by the capitalists. Then we had other instances of this, like for example, the way the ruling classes intervened in 2020 with the pandemic, which was unleashing enormous amounts of public money in order to contain the contradictions provoked by the pandemic. And that's one thing that is always in the back of the minds of the capitalists. They fear the consequences of this crisis. It's not so much about losing money, but it is the stability of society. It's that their rule is being questioned. The emperor who has new clothes in reality is seen for what it is, and it is naked. And that's what happened in 2008. People were seeing the shortfall of the system. They saw what it was in reality. And this has been repeating over and over again. What I see as a perspective is a market crash will have enormous consequence from the point of view of the impact on people's life, whether directly or indirectly through the intervention of the state, meaning more contradictions, which eventually will lead to an explosion of inflation. That's the outcome about that.
Yeah.
Or by a direct attack on the living conditions of hundreds of millions of people. That's these are the two possible outcomes from this.
Yes, because the capitalists face two kind of enemies. One is the crash itself, which is their main concern. They don't really care about anything else. They want to save their own.
If they can get away with it, that's fine.
Own skin. The other is the working class, and you see, these crashes often are compared with 1929. 1929, the crash in 1929, and the Great Depression, which was 10 years of depression basically, which followed, started a period of intense class struggle. There is a difference between then and today, which is that the working class back then was a minority of the world's population. But today the working class is the vast majority. That is, people who don't own anything. That is the definition of a worker. It's someone who doesn't own anything and who is forced to sell his labor power in order to live.
Survive.
That category has now been expanded and massively, both in the industrial working class and other layers who have been proletarianized, who previously would have been middle class. You have a huge working class, which, if provoked, would be unstoppable. Yeah. The capitalist class in the 20s and 30s had a base amongst the peasantry, amongst the petit bourgeois, which they could whip up. You know, basically, there was a basis for mass fascist movements, which don't exist today. There's no such thing today. What you have today is an incredibly strong working class, a incredibly discredited ruling class, which is hated by everyone. And therefore, if the workers are provoked with a shock like that, you would see revolutions everywhere.
Yeah, after the shock is absorbed, of course, because the initial impact of the shock may be paralyzing. The organized reaction by the working class. But as soon as people start realizing what is going to happen.
But I think what we also see is, because they fear, we see this in France now, they cannot form a government that will carry out the austerity budget because they know what's going to happen to that party. Now, that's just the beginning of things. They need to cut about 40 to 60 billion euros per year. That's just the start. Interest rates will go higher up. New loans will have to be, refinanced on higher interest rates than before. And they are afraid of it. And if you add the consequence of a crash or the bailing out of huge companies worth trillions of dollars, no one wants to do that. So I was reading in Financial Times today, and one of the commenters were saying, inflation is starting to look increasingly inviting, which means what?
Yeah, they want to inflate out of their debts.
Which means, yes, exactly. By printing money, undermining the value of the money, raising inflation, you wouldn't face the head-on clash with the workers. No political entity would take responsibility for that. And you would devalue the amount, the price of your debt. But obviously, that wouldn't take away instability. Because inflation would raise the cost of living, would put enormous pressures on the working class, would destroy business environment as well, because businesses, you can't do business with high inflation. So I think what we're seeing is two prospects. One is taking a crash head on, and we're not saying this is going to happen now. But there's definitely warning signs that there's enough infectious pus there for something like that to happen. But you could have a situation where the ruling class trundles along as it has so far, at the cost of this debt burden growing to a certain extent, massive inflation, massive instability,
building up along,
and the bigger and bigger parts of the resources of society being gobbled up by interest rates, by other things, and a slow decline, which would not change anything in the sense that it would be equally unstable, it would equally deep crisis, maybe even prolonged. At a certain stage, you could see crashes, but basically building up on the contradictions with new contradictions.
Yeah,
and then grinding the economy to a halt.
Yeah, I think this is the least likely scenario because of the fractures in international relations. It's very unlikely that the capitalist class on a global scale will be able to agree on a common policy on how to face this. So what is happening is actually that because of the policies of the Trump administration, which is make America great again at the expense of the rest of the world. These contradictions are becoming more and more explosive and least controllable as the situation was before. Now all this is getting out of the hands of even the most powerful government on the planet, which is the U.S. government.
Yeah. What is the alternative?
Well, the alternative is that the crisis will take place, will unleash, and we are entering a period of revolution and counter-revolution. We already are in. If you look at what is happening around the world, even in a situation where supposedly growth is still taking place, there is still kind of a positive economic environment. But you see in a number of countries that the contradictions have reached a breaking point. And this is provoking revolutionary movements. We've seen this in Madagascar. We've seen this in dozens of countries in the last few months. And of course, these are more the periphery of global capitalism, of imperialism so far, but it is affecting also the core countries more and more. See Europe, for example, uh, uh, or the United States themselves. All these contradictions are dynamite built
Mm.
in the foundation of capitalism.
Yeah. And the point is this, I think, for our readers, for our listeners out there who might not be familiar with communist Marxist ideas. The point is the paradox that capitalism presents us with is, yes, we talk about overproduction, overcapacity. There is too much productive capacity. There's too many factories, too many machines, too much technology, which can't find a market to sell its goods. And so you have this, on the one hand, this huge amount of wealth or potential productive capacity, and on the other hand, you have unemployment rising, poverty rising, cost of living going up. Whereas, why is this machinery, why is all this technology not used to sort these things out? The infrastructure is falling apart. Communications, transport, roads, schools, healthcare.
Everything would require a change in the system, how it's run. That's what is being posed by this crisis that we're facing. It's the end of the ability of capitalism as a historical system, a mode of production, to bring forward society to a next level. Capitalism has played historically an enormous role in developing the productive forces. They're incapable of doing that, and it has reached its limits. And it can only be resolved by a revolutionary change, by the overthrowing of this system. Starting from, of course, the countries that are dominating the world capitalist system, the United States, the European countries. That's where, at the end of the day, the decisive struggle will take place in terms of a struggle between revolution and the defense of the status quo and counter-revolution.
Yeah, we have a system where production is social, which means that everyone in society participates in the running of society. Everyone bar a tiny group of parasites, of course, at the right at the top. But ordinary working class people, even middle class people, they're the ones who make the society run. People who make the electricity come into our sockets, build their houses,
transport system.
Nothing can work without without the how to say what Ted Grant used to say, without the permission of the working class, which is a huge social force which makes up the majority of society. Is this collective labor, the collective labor of the working class, that runs the society. But the profits of this system is private. Production is social, losses are social, profits are private, and concentrated in the hands of a tiny minority of people. That's what creates these dislocations within the system. And those people have no interest in how society works. They don't care. They live well where they live. They have no interest in a functioning society. Their primary interest
is preserving their power.
And increasing their profits. That is the logic of capital. In fact, it's the capital that's even running those people. Because they say one of them decides tomorrow, I don't like this. This is unfair. We should change this. Well, he's going to be outcompeted by whoever is willing to take the bigger risk, and take over and be more ruthless. That is the problem of capitalism. You cannot control it. Is run at the top by a tiny group of people who compete against one another. That's an important element in this. And whose sole interest is maximizing their own profits. If they cannot maximize their profits, they're going to go out in competition. And therefore, you end up with this kind of strange situation. Huge amounts of the resources of humanity that humanity creates goes into these black holes of speculative bubbles and debt repayment and interest payments, which the vast majority of people don't have anything to do with.
Mhm.
You know? And so the solution is a general overhaul. That's what the revolt of the masses, the revolt of the working class that we're beginning to see on a world scale is a revolt of the productive forces, if anything, of the forces of production against the relations
Yeah,
of,
yeah.
of these relations.
The property of the capitalists must be expropriated.
Mm.
That's the only way out. But of course, it will not be done by bourgeois governments, by capitalist governments. These resources, these productive forces, must be used and put together in a plan of production which would resolve the needs of the mass of the population for the first time, and not in a blind way, but in a conscious way.
Yeah.
This economic planning is needed, but capitalism is incapable of providing anything like that. And therefore, the task in front of us is that of a worldwide socialist revolution, in the sense of expropriating the capitalists, putting the productive forces, the economy, into a plan which is discussed democratically by the majority of the people, those who are contributing to developing the productive forces, to work and produce what is needed, and make a leap for society that we haven't seen ever. A situation where we already are in a world of plenty, potentially, but capitalism is increasingly undermining the possibility for humanity to live a decent life, a possibility of developing our lives to the full.
Yes. I think those are perfect words to end this episode with. Thank you very much, Francesco, and thank you very much for all of you guys tuning in. Don't forget to share, like, and subscribe to our show on different channels, and send it to your friends, families, whoever you think could be interested. Against the Stream will be back again next Thursday, 6 p.m. London time. Thank you very much.